we have moved into a corporate office. അതിൻ്റെ ഒരു ഇനോഗ്രേഷനാണ് നമ്മളിപ്പം CM കൊണ്ട് ചെയ്യാൻ ഉദ്ദേശിച്ചിട്ട് ചെയ്തത്. ഈ സ്റ്റോറി ഓഫ് ഹെഡ്ജ് എന്നൊക്കെ പലവർക്കും മീഡിയ എല്ലാവർക്കും തന്നെ അറിയാവുന്നതാണ്.
The Indian economy has come a long way today. From a tightly controlled license rod system, the economy has shifted to an open system which gave rise to the inception and development of high-growth sectors like the banking and finance sector. Initially, the middle class had to depend upon the banks or traditional money lenders. There was a time when the banks focused more on deposits than loans. Thus, the money lenders began to play a critical role in financing. This meant more burden on the common man. That is when a new concept, non-banking finance companies, began to take roots. Unlike mainstream banks, the NBFCs focused on giving loans to the needy customers. And unlike traditional money lenders, people got a better deal from NBFCs. Little surprise. NBFCs constitute a major chunk of the country's overall financial system. It is estimated that the NBFCs as a whole accounts for 9.1% or rupees 4 trillion of assets of the entire financial system in India. NBFCs help make many a dream turn real today in India, thus playing a vital role in the country's economic and social progress, creating opportunities, helping achieve goals, making life happier. A long, long way from the past when lack of money crippled economic progress and lives. NBFCs brought a new promise, adding more zest to economic progress, creating the promise of a better tomorrow. This is precisely what Hedge Equities, India's one of the leading players in the financial market, is committed to deliver through its new venture, Hedge Finance. By diversifying into NBFC sector, Hedge intends leverage on the parent company's core competencies in the financial market vertical. With this, Hedge aims to add more value to its customers. By remaining a trusted partner to its customers, Hedge intends to build a unique brand value. With the launch of its unique Loan Against Securities (LAS) model, which has a whopping potential, the company also intends to provide gold loans, other types of conventional hire purchases and loans against properties. As an organic extension of the services of Hedge Commodities, another group company having membership in MCX, NCDX and NMC, Hedge Finance will also lend against warehouse receipts. With the already wide client base and latest infrastructure in place, we are confident of achieving a loan book position of rupees 100 crores within the first 3 months of operations. The new company will also spearhead the group's nationwide expansion, as plans are on the anvil to open branches across all the metros.
Hedge Finance. Grow with an edge.
Right information at the right time is the mantra for any successful investment. Every right investment you make not only offers you a greater returns, but paves way to a financially stronger India. Invest with an edge with Hedge Equities.
Hedge Equities. Invest with an edge.
Hedge Equities, your own equity advisor.
It all started as a dream. Hedge envisioned the dream of establishing a world-class company catering to the financial markets, and today we're living it. All this has been possible because of the prayer and support of each one of you, and today we give you Hedge Finance. Ladies and gentlemen, welcome to an evening which is indeed a celebration of your success.
Dear friends, this is a special evening, an evening for all of us to cherish. I had spoken at a function for Hedge a couple of years ago and still remember every moment like yesterday. The atmosphere, the people I go to hear and meet, made it a wonderful evening. Today, I believe, will be no different. I have always considered my relation with Hedge Equities special. The main reason being the kind of people I get to interact with, you. Let me begin by saying I look forward to have many more such evenings with all of you in the years to come.
The king has arrived. Hedge Finance, grow with an edge. Moving on, I'd like to invite onto the stage for lighting of lamp to formally launch this venture from the Hedge family.
Dear friends, let me be honest. I haven't come here as a Labour Minister of Kerala. I have come here as part of the Hedge family. It's been my long association of more than 25 years with the family. And today I feel proud in being associated with such a family. Okay, now we have added Hedge Finance to Hedge Equities. That's really awesome, adding a tiger to a bull. It's an awesome force, really. I feel proud the way the company is growing.
Thank you, Lal sir. Next, I'd like to invite Shiva sir, our Honorable Minister, to give away the next and final category of awards, the Employee Awards. Sir, please. First category, Best Performing Region 2011-2012. Alua Region, Regional Manager, Mr. Vinod Kumar P.
Thank you, and good evening, ladies and gentlemen. Today we are having an opportunity to talk about gold. It's something that most of us are familiar with. Over the last couple of years, perhaps the main question most people have had on their minds is it a good investment? But really the story of gold starts long ago. In some ways, it's not whether it is a good store of money. At one point of time, it was money itself. We've got a fascinating panel of speakers today.
Thanks, Venkat, and I think it's a very prominent question looking at the fact that there are a lot of non-finance people who are in our midst. What I'll do is I'll just take 5 minutes and I'll just explain to you, the history of ETFs and what they actually are, in very simple terms. I mean, if you look at mutual funds in general, if you look at the history of mutual, you have close-ended schemes, you have open-ended funds, and you have exchange-traded funds. Way back in say the 1940s and 1950s, the first kind of mutual funds which came about, were close-ended schemes. A close-ended scheme was basically a scheme where an asset management company or a fund house launched a scheme, raised money from investors, and then closed the scheme. The problem with that scheme was that there was an end period for the scheme, and during the period you couldn't, add money or redeem money from the scheme. Most of these schemes got listed on the exchange so that investors could get out, if they wanted to. But the big problem there was that you never knew what the price was. And you might have experienced this even in the case of in India when there was US 64 and Master Gain and all these closed-ended schemes which were there. The NAV might have been 20 rupees, but it's trading at 13, 14 rupees. So you never know what the value of the scheme is, and therefore you don't know what price it is trading at in the market. You don't know if the price is correct or is right or wrong. And to do away with that anomaly of closed-ended schemes, you then had a breed of new schemes which are open-ended schemes. Now the biggest benefit of an open...
At the outset, I must congratulate Hedge Finance for getting this NBFC license. My congratulations to Alex and the team, because today it is very difficult to get NBFC license because of the lot of regulations at present time. It must be because of the excellent work Hedge has done, they could get this license. I compliment all these people who are behind. And to the question about the bank's experience, most of the people today, everyone is concerned what is going to happen to the gold price, whether this will remain like this or it is likely to fall. I'll just tell you some interesting point. In 1970, that means exactly 42 years back, the value of 1 gram of gold, it was just 10 rupees. 1 gram in 1970 was just 10 rupees. In 75, it went up to 54 rupees. In 80, it went up to 133. In 85, it went to 214. In 94, it went to 340. In 95, it became 468. In 2000, for the first time during the recession, the gold price came down little less. It came down to 438. And then in next 5 years, it went up to 620. And in 2011, now it has crossed 2050 rupees. So the way it is increasing, if you look at last 40 years or 42 years, except during 2000, during the peak period of recession, the gold price has been continuously going on increasing. And the expectations, that is what is the present market trend, because the inflation is continuing and the uncertainty on the government's tax policy, it is expected that another 1 year time, the gold price is still going to, 10 grams of gold is likely to cross 30,000 rupees. This is the expectation in the market, because this clearly shows the value of gold as an investment. And as far as the banks were concerned, in olden days, and another interesting point is, out of 18,000 tons of gold in India, only 4% people have pledged in bank and taken loans. So this is the great opportunity for the banking system for further gold loans. That is 96% of the gold the Indians are having, either they have kept it in the locker or in the house, just like as an investment. So this gold can, if the people start availing loans and use for productive purposes, that can make a big change in the country's economic situation, because these are all just because of the appreciation, people buy and keep it.
You cannot change that. It is a tradition, it's a perception. You cannot change the perception. It's been there for 2000 years. How many governments have come and gone? How many people have made so much things into it? But you cannot change that. But obviously that is a point. As an economist, I think I will agree to the point, because around 60 billion, if the new figures are out, around 60 billion is used for gold imports, whereas 150 billion is used for oil imports. So if you look at the pure man perspective or a macro perspective or economist perspective, you can see, okay, oil imports we can understand because we have to run a lot of things into this. This 60 billion, what is it used for? This is used for wearing as jewelry or something like that. So in that perspective, there is a huge problem. But you cannot play against perception. So even if I am
जगरा